All right, this is week 16, outlook number 1. Get back to our regularly scheduled program, starting with the British pound futures. We've got a lot of stuff going on. All right, so as we can see, the liquidity draw that we pointed out in the 15.2 outlook, it gave a response but ended up failing. We had our targets of where we wanted to see bearish price action to continue. That ended up failing. And so what we have now is not only a failure of the liquidity draw, but we have break of structure of not only, well, actually this high here. Let me zoom in. We have break of structure of this high here, but I believe, yeah, those are pretty much equal highs. We have break of structure of two equal highs, and so that has transitioned us from a bearish run into now a bearish range. Now, why do I say that? Well, for one, it's a bearish range now because we have broken structure of a previous structural point / liquidity point, which was here. And so because of that, our range now, and I can get rid of these lines and this liquidity draw here, now exists from the macro perspective of our high, which is all the way up here, all the way down to our low here. And so validation, quick qualitative validation of our range that we have demarcated is the fact that around 50%, we have a lot of sensitivity. A lot of sensitivity, a price action around 50%, and then you can see it's pretty spread out on the premium side and pretty spread out on the discount side, with a lot of really price action here on the discounted side in reference to the monthly mitigation of the price gap, and then also the mitigation and activation of orders after we took out this previous structural point here on the daily time frame. So this explains, from the price action perspective, a lot of the reason why we have this price action the way it was here. And now we see that we did trigger a ton of bullish orders inside of the discount after post break of this structural point here, which is also a monthly price gap mitigation or area of interest. And so because of that, that has led to the bullish price action that we are now seeing. So we have officially transitioned from a bearish run into a bearish range. So as I stated in the previous outlooks, if this was going to happen, what would we still be looking for is the overall bias based on the market state is we're still bearish, but we're going to need to be more careful with our price action and targets because we've now transitioned states. So first thing is that if we're trading inside of a range, we know that if we're looking for sells, we only want to sell in the premium. If we're looking for buys, we only want to buy in the discount. And aligning with our current market state, and obviously the fact that we're tending towards the premium side of the market, we should be looking for selling opportunities, not buying opportunities, especially once we cross over that equilibrium line. There is no reason to be looking for buying opportunities because there's just way too much uncertainty or volatility that could lead you to unnecessary losses. So looking for the sells on the premium side of this market, remember I said that everything is pretty much balanced as far as areas of interest go. All of these price gaps, all of these sponsored candles, everything that I saw was pretty much balanced. The only way that I could see continuation of a bearish market here on the British pound futures is going to be based on price action or based on structural actions, which is going to have to be a liquidity draw of one of these now rendered liquidity points. And so the liquidity points that are nearest on the premium side are going to be this high and this high. These two are pretty much, really close together, so they're relatively equal highs, but nonetheless, we still want to, differentiate between the two because they both have different liquidity pools resting above them. So those are the two most relevant highs that I'm looking for price to, mitigate. So we have some time for price to continue running higher. I do notice immediately, because I'm doing this live, that we do have a high here liquidity point here that we're tending towards, but that's on the discount side, so that's not really relevant to me. What I would like to see is if we're going to continue sells is right now we yield that bullish plays are in order, and so price is going to continue higher towards one of these highs here. Now, another thing that if you are noticing is why didn't I mark out this price gap here? Well, for one, it's straddling the discount and premium sides of the market. So for that, I really am just intuitively against taking trades off of really around 50% of the market unless it's like extremely clear, even though the premium side of the price gap that if we mark it up here, it is on at least closer to 100% is on the premium side of the market. But then again, it's not really, it's not really doing it for me. If you are looking for opportunities, I mean, that is there, but I'd rather look for, like I said, a structural action in this particular case rather than a area of interest or a inefficiency based action to look for opportunities. And so even though this is coupled, it's still too close to the discount and premium side, really the equilibrium, where it's extremely sensitive, and I would have to be very, very cautious of how I would trade this. I definitely wouldn't be aggressive with it. I would have to wait for price action to yield a favorable response. But at that point, I'm just intuitively have convictions that price is going to take out these highs here, or at least this high here. So if it does, if I do get a favorable response, then obviously I'm going to take the opportunity. I'm gonna wait for it. But I'm just based off of previous data, I see that price is most likely going to tend towards this high here. All right, so that's what we're seeing on the British pound future. Recap TLDR, we have entered into a bearish range, transition from a bearish run, and we are looking to cross over into the premium side of this market here relatively soon. We have this price gap marked out, but like I said, I'm not going to pretty much use it. I know what I'm looking for right now, so yeah. So that's the British pound. Moving on to gold. All right, so gold yet again, like it's not really doing much. We're just, like I said, we're going to continue to range. And I know a lot of people that are watching real life events at the time of this recording. We have the Strait of Hormuz news going on. People are thinking end of the world, blah, blah, blah. Well, as far as price action goes, this is just all a part of a macro range. So there's not really much to say here. Range-based rules are in effect. Trade how you want. NASDAQ. Holy moly. All right, so on the NASDAQ, we actually did get a liquidity draw. We got a response similar to the British pound futures, and that led to a run even higher. And like I said, everything on the premium side, similar to British pound futures, is balanced. So the only thing that would stop this bullish run here is going to be a structural action happening at one of these liquidity points on the premium side. And as you can see right now, they're failing, right? This liquidity draw, it had very short-lived response, and it ended up running towards the next high. And then we just completely blew past these two highs here. We blew past this high. And so we're now heading towards this next high, which is here. And so I have no doubt that price is going to reach that target. And so we're just on basically an internal bullish run right now, heading towards these targets on the NASDAQ, and remembering that we're still inside of a range. So the higher we go, the less secure that this bullish play is in theory going to play out, because we're going to be reaching deeper liquidity pools on the premium side of this range. Now, if it just decides to just absolutely blast through this range, then holy moly, that's great for the markets. But I'm very skeptical of it. I definitely see this starting to slow down as we move deeper into the higher, percentile of the premium or the premium portion of this range. So that's pretty much what we're looking for right now, is just a structural action that's actually going to yield the result yield the response that we would like to see to press price back down lower. The counter analysis is this just continues to rocket and the bullish run just clears, has a very low effort liquidity run to take out all of this liquidity in the premium side. And then we have to assess the action that happens at the high of the range, if it's going to be a liquidity draw or a breaker structure. And so just very anticipatory, if this ends up being a liquidity draw, it's going to be a massive, massive response, and there's going to conspiratorially, there most likely will be a black swan event that leads the market to absolutely just dump. If it's a break of structure, we're going to have continued very well structured price action moving higher. But as of right now, we're still sticking inside the range where the range rules and range trading are in effect. We're waiting for a response at one of these structural points here. I'm sorry, not the structural points, these liquidity points to send price back towards equilibrium of the range. All right, so getting rid of these lines here, what we're looking for right now is a mitigation of this high here, and then the next high that would be mitigated would actually be here as well. All right, so that's what we're looking like on the NASDAQ or NQ. Now, on the Dow Jones, similar predicament. We are in a range, as we discussed in the previous outlook, based on the break of structure of this price leg existing from this high to that low there. And so because we got that break of structure that generated the range that we were looking at, we saw that we ended up getting a break of structure. And then we see that after that break of structure, we had, a run and then just pure price action, sensitivity around 50% as expected. And so now we're looking to target a new high because there's no liquidity other than this low here that exists, in the immediate price area. And that's exactly what price looks like it's tending towards. So we want to see, similar to the other pairs, British Pound and NASDAQ or NQ, what's going to happen? What's the structural action that's going to be here? As I stated before, similar to the NASDAQ, and well, the British pound as well, everything is balanced here on the premium side. There's nothing as far as area of interest or inefficiency that is unbalanced to me. So everything that I'm looking for are going to be structural actions. So like broken record here, I want to see what the action is here. And then if it fails, then the next action at the high, next action, and so on and so forth. That's the logic that we're playing here. Very binary, very true, false. So yeah, that's pretty much what we're looking for. We're looking for price to take out this highs, look at the response, and if this ends up being a break of structure, well, we look to the next high. And so I'll go ahead and demarcate that now. All right, it's going to be that high there will be the next high if this ends up being a break of structure, which it looks like it most likely will be, but, we'll have the question mark just in case. All right, I think that is, nope. We have one more pair. Okay. Then we have oil. So we talked about oil in the 15.2 or 15.1 outlook, I'm pretty sure. We explained that we're basically in a very massive range. We had, it looks like, was that today? No. I'm so tripping. We had a run up earlier today. I think at market open, we opened and then we just essentially filled that gap completely. So there's really not much to say here on oil. It's simply just look at the structural actions that occur inside the range right now. It's basically a no man's land, in my opinion. There's not much to say about it. If it does go higher, great. If it does go lower, great. It's really lockstep or coupled to what's happening in the real world events right now. And from the price action perspective, if you are looking to trade it, I would say strictly look for structural based actions because there's not any areas of interest or inefficiency objects that are relevant right now. All right. So that is week 16 outlook number 1. Peace.